Hello everyone, this is Sridharan from Wallet Wealth. So we have been seeing about Gift City last video. In this video we are going to talk about specifically the outbound Gift City which is being offered by PPFAS. So far, being an Indian investor, we have been explored to invest in Indian market and also explore to other market like the developed market like US or Europe or any other countries using the mutual fund route. So presently, this PPFAS offer the outbound facility for Indian investors who can also expose to other market exclusively for US. So they have two products. One is actually specifically focusing on S&P 500 index fund. The other one will be focusing on NASDAQ. So specifically, if somebody wanted to take an exposure on technological companies, they can take the exposure on NASDAQ, and somebody wanted to have a broader market exposure, they can go with S&P 500 where 40 to 50% of the portfolio will be in the technological side, and the balance 50 to 60% they have the exposure to the other manufacturing and other sectors that are there in the US market. This follows the simple S&P 500 index and NASDAQ index. So this is basically a fund of fund concept is what actually this works with. And the key advantage of investing in this is actually when you are investing, you can invest, the minimum investment is actually 5,000 USD, and the maximum investments without paying any TCS, without deducting any TCS, is 10 lakhs as per the latest income tax rule. Anything over and above 10 lakhs, one has to deduct a TCS of 20% and they'll have to remit to the income tax department, and this can be claimed after 1 year. So this is actually is the key advantage. And who can invest? If somebody is already having exposure in the US market, mainly the HNIs and ultra HNIs, where they are already having exposure to Indian market, where they wanted to expose to other market, can consider investing in this PPFA's Gift City. The other one is basically what is the risk involved. The risk is, since we are investing in the the US market, there is always two risks that are associated with it. One is the market risk, where the investments are completely investing in the equity market, so the market volatility may probably affect the returns on the portfolio. And the second is the currency risk. So the currency risk, if the US dollar is depreciating against the Indian rupees, then we will have a the currency issue. So the currency depreciation or appreciation also affect the portfolio in a positive or negative way. So these are the two key risks that are involved. And thirdly, this is basically the regulatory risk also involved. If you consider the mutual funds did not allow to allow to subscribe into their foreign investments during the last couple of years due to the regulatory limitation. So this is actually is the key advantage of investing in the PPFAS, the Gift City. And finally, the taxation per se, the taxation is actually within the fund itself, it is taxed at. If anything less than 2 years, one has to pay 40% is the tax, which will be taxed at the fund level, and it will come into the investor as tax-free income. And when it is more than 2 years, there is actually 12.5% plus cess and everything put together, it is close to 14.25% is the taxation on the long term. And the tax will be the 14.5% or 14.25 will be taxed at the fund level, and the investor actually will be getting the money as tax free. It is not considered as tax free because it is taxed at the fund level, not at the investor level. And anybody who is having high risk appetite, already having their portfolio exposed to Indian market, can have the exposure to the US market by investing in this product. Thank you.